whether you meet him at the drinks afterwards, who's the head of international government engagement at Aviva, Karen Ellis, who's the chief economist at WWF, and Franklin Steeves, who's a senior policy advisor at E3G working on international finance. Quick shout out to a missing person in the room. One of our other esteemed panellists, Josie Murdoch at Aldersgate Group, came down with COVID after having had fun at Glastonbury, so we can be equally sorry and jealous for her, and hope she's watching today and feels better soon. And I also just wanted to shout out to a couple of people I think we should thank for today's event. So firstly, Aviva, who've been so generous in not only hosting this event space, as well as a number of others across London Climate Action Week, but also for hosting some drinks afterwards for those of us in the room. So, I mean, that's just very generous, so thank you so much, Paddy and team. I'd also like to thank Eduardo Lopez, who has stalwartly pushed this event forward, and I think he's sitting there, and I think he should be very proud of himself, and all the other staff on the technical teams across Aviva and E3G. Part of the reason we're in this beautiful space is we had some tech issues, and I think we're all happy to be here. Some other housekeeping stuff. So this event will be live streamed to YouTube on E3G's YouTube site, so if you want to share it afterwards, you're more than welcome to. We'll also take a number of pictures today, so if you don't want your pictures put up on social media, just let one of the team know, and I'm sure they'll say yes reluctantly. And finally, as this is a hybrid event, I think we've got over 100 people watching online, which is amazing. We want to make you guys feel like you're in the room as well. So we're going to have a time for an audience Q&A at the end of this session, and my colleagues will be watching the chat of the Zoom and making sure that if you have any questions you'd like to pose to the panel, we'll record those as well. So just do put your questions in the chat with your name and organisation, and we'll try and make sure you have some time to be heard. And finally, and probably most important, before we dig into the content of today's event, I think I just want to shout out that we're going to be digging into some lovely snacks outside after the event. So it's good kind of balance there of thought and body. So what's today's discussion about? Demand for net zero from the private sector and the ongoing cost of living crisis that is impacting people and families, not only in the UK, but across the world, has highlighted the pressing need to scale up investment across the UK in clean, green and cheap energy solutions. However, if we're going to actually leverage in private finance for these goals, it's going to require a package of clear market signals and strategic public investment, as well as just a clear direction of travel from government. And despite a number of amazing reforms to date set out by government, including the UK Green Taxonomy, the UK Infrastructure Bank, and also the launch of the Transition Plans Task Force, as the CCC's progress report yesterday, that came out yesterday highlighted, there's still a long way to go. So the panellists today, I hope, are going to put forward some specific recommendations and ideas for how actually we go about plugging that gap. And for those of you whose idea of an hour of green financial reform discussion is akin to hell, I promise you it's going to be interesting, and I hope you leave as interested as I am and as passionate as I am about making sure this happens and happens well. So without further ado, I'm going to turn to our experts in the panel. And Paddy, to kick us off, I'm going to ask you quite a broad question. What does a net zero financial centre mean to you?
So for me, a net zero financial centre is one in which every single organisation that is operating within that financial chain, so whether that's an insurance company and pension provider like Aviva, or a retail bank, an investment consultant, anybody operating within that chain has a clear net zero target, has a clear plan explaining how they're going to deliver that target, and is held accountable to that plan by their regulator, by the government, to ensure that, the entire financial centre and the investment chain that operates within that centre is fully aligned to net zero. And I think we're getting to pieces of that puzzle, including through some of the, like genuinely good interventions that the government has made in recent years, but we're still quite some way from being there. And I think fundamentally, you both need action from within the financial sector, including regulation, but you also need the real economy to be moving at the same time. And so that's why, looking to what the government is hopefully going to announce this year in the update for the Green Finance Strategy, what I would really hope to see is a package of measures that includes ones that directly impact the financial sector. And, Aviva is happy and willing to take, new regulation where it kind of levels everybody up, but also we want to see powerful signals in the real economy as well. And I think getting that balance right will be what helps to create that net zero financial centre. And what a cool target for the Chancellor to have set. Like, I know the government will have been looking for something big and important sounding to commit to at COP26, but that's a genuinely bold thing, and I don't think it's been done before. So if the government can actually deliver on that, and that's a big if, it would be really, a really powerful signal to the whole world.
That's incredible, Paddy. Thank you so much for kicking us off. And I just want to come to Karen and perhaps pose the same question. Is there anything else that you think should be embodied in this Net Zero Financial Centre commitment?
Yeah, well, so I think Paddy did a great summary of what the overall vision should be for this. I think in terms of what is required to make sure it's delivered, I think first of all, we need a really strong legal and regulatory framework around it, because I don't think we can expect the financial sector to get there by itself. There are lots of market failures involved in this, and so we need directive regulation to actually drive that forward. And there is a huge opportunity right now, because we have the Financial Services and Markets Bill, which is expected to be published very soon, which is rewriting the rules for the regulatory framework in the UK post-Brexit, with a huge opportunity now to actually make sure that net zero, and we would also argue nature, is part of the framework and one of the top priorities given to the regulators to actually deliver on this. Because you don't know how you can achieve that goal of a net zero aligned financial centre without having the regulators have a duty to actually deliver that, because otherwise, there are so many other objectives that they've also been given for growth and competitiveness and possibly inclusion and all sorts of other things. There's a lot of different things for them to deliver, and this would fall down the list of priorities. So we really think that that's the opportunity right now to make sure this is embedded in the thinking of the regulators going forward. And it's a really, it's a massive once-in-a-lifetime opportunity really to reshape the regulatory framework around it. Totally agree with Paddy. We also need the rest of government to be delivering on this too, and directing public finance to the net zero transition as well. And we've called for a while for a net zero test of public spending to enable us to assess whether the overall package of government spending is adding up to something that's taking us towards our net zero goal or taking us away from it. But at the moment that isn't produced, and we've more recently started saying that the government needs a net zero transition plan. If it's going to ask the private sector to do that, it needs to do one itself, that sets out how it's going to get to the net zero alignment of all of the policies of government, the key policies of government. So I think there's a lot that needs to be done to actually get us to that net zero alignment, but it's great to have that commitment in place and good progress being made against it at the moment.
Some fantastic ambition setting there, and a lot to do for government, I would say. And now I'm going to come to Franklin. So Franklin, obviously a lot of your work is around international reform. What does this commitment mean for the UK and the world?
Yeah, just picking up on Karen's points, I think particularly when it comes to financial regulation, entirely agree that that's going to be the key driver going forward. But I think that the backdrop to that should be the global context, international context, and the need to ensure that when it comes to disclosure requirements, when it comes to taxonomies, when it comes to transition plans, that those are as aligned as possible or as harmonized as possible with international standards, whether it's EU, US disclosure requirements, the common ground taxonomy in the case of the EU and China. And I think that's really going to help to facilitate the implementation of those new regulatory standards by particularly multinationals. In the broader context, the UK Net Zero Financial Centre, of course, has got to be competitive, because we're talking about now, in a sense, a new race to the top, we hope, with other major financial centres around the world adopting similar regulatory frameworks and legal frameworks. And that means quality. It means really the highest quality when it comes to regulations, but also to the operating environment within which the financial institutions are driving towards that net zero transition.
Mm-hmm. Well, that's a very comprehensive package. So, you've just raised the taxonomy, Franklin. So just for those in the audience who have no idea what that is, how would you describe it?
So a taxonomy is essentially a list of various economic sectors and activities that are essentially judged to be either sustainable or not. I'm sure most of you have followed the dispute within the EU about what's called the Second Delegated Act, whereby the European Commission essentially accepted that both unabated fossil gas and nuclear were deemed to be green investment activities. Important, of course, to flag that taxonomies are not compulsive. They're guides to investment, and so firms and banks are not prohibited from investing in activities that are not listed as green, but it's an incentive and a kind of science-based guide to what is and what is not a green investment.
Thanks, Franklin. And Karen, I understand that WWF was quite actively involved in pushing back against recent media reports around the UK, including gas and our own taxonomy. So I wondered whether you wanted to speak about why you took that position, and also potentially lay out, the pathway forward for the UK during this energy crisis to have space to keep the lights on short term, but create a pathway forward that leads us to net zero.
Yeah, well, I think when you're talking about the green taxonomy, that should really be setting the standard of what is really green, and that cannot include gas. I mean, the science is very clear that that cannot include gas. So the idea that we would just put gas in the green taxonomy for short-term reasons doesn't make any sense, because the whole point of the taxonomy was to be a really science-based, credible, robust definition of what's really green. If we want to include the shorter-term challenges, and obviously there is a big issue to deal with around energy security, then I think there is scope in a sort of transition category that is not considered fully green, and that's something that is being discussed in the EU context, not so far in the UK context around the taxonomy. But anything like gas, and even then it's got to be transitioning out, but it can fit in that kind of category. Whereas I think the idea that it becomes defined as green because we need it for short-term reasons is really not sound logic. So, I mean, yeah, we have stood up against that being an included. And I think a lot of businesses have also said that is really not the right direction of travel, and it really undermines the sort of credibility of our commitments to net zero as well. So, yeah.
Fantastic. And Paddy, from the investor perspective, how do you see a green taxonomy being useful for the investor community?
So I think as Karen and Franklin have both said, having a credible yardstick to judge what is an environmentally sustainable investment is really useful, right? For a number of reasons, because ultimately we're seeing increasing demand from our clients for sustainable investments. We're seeing increasing pressure from our regulators to make sustainable investments. So they need to have confidence, and we need to have confidence that when we're saying that we're making sustainable investments, that is actually credible and consistent with what others are doing too. And if we look at, the other thing that particularly at Aviva we're heavily involved in, this concept of private sector firms having net zero transition plans, the aim of that is the same as well, right? So if you look at the way that private finance and its relationship to climate has developed over the last 5 years. So I used to be a climate change negotiator for the UK government, so I sort of saw it from the other side. I was part of the negotiations for Paris in 2015. At that point, the kind of commitments you would see from the private sector were they would just throw a big random number in the air. So, you would get a bank would be like, yeah, we're going to put 10 million a year into renewable energy for the next 5 years. That's a nice thing for that bank to do, but if its balance sheet is in the billions, it doesn't really add up to very much. And if everything it's doing elsewhere on its balance sheet is going against climate change, it's potentially not very important at all. And then since I've moved into the private sector and working for Aviva, I've noticed a more positive change, which is companies are making complete commitments across the board to net zero. So I'd say, last year and the year before was the year of commitments, when you had things like, a lot of big companies like Aviva setting net zero targets which applied across all of their activity, and then coming together in alliances like the Asset Owner Alliance, GFANZ, and that had bars to entry. And then what I hope to see this year and beyond is those companies coming back and saying how they're going to do that. Because last year it was just like, let's get as many companies as we can saying they're committing to net zero. There was a kind of, there was a credibility to it, but also just a rhetoric of if we can get to Glasgow and you've got hundreds and hundreds of massive companies all saying that they're going to align their practices to net zero, that will be a really positive thing. And I was completely down with that, and I believe it was the right thing to do. And Aviva was one of the first to get out there and say, yeah, we'll have a net zero commitment and it's not going to be 2050, it's going to be 2040 and it's going to be everything that we do. But now I think it's time to explain how we're going to do that. And you can't just leave it up to individual companies to sort of mark their own homework and say, yeah, don't worry about it, it really is net zero honest. I think there needs to be some sort of credible and consistent arbiter of what a good net zero plan looks like. And so that's why we push the UK government to say voluntary commitments to net zero and voluntary transition plans aren't enough. We need to have mandatory transition plans. And so, again, credit to the Chancellor. He said that from the end of next year, all listed companies and most financial services firms will have to have a mandatory net zero transition plan. And Aviva is leading work with WWF and a number of other companies and the UK Treasury to set out what gold standard guidance for those net zero transition plans would look like. So if you look back 5 years, I think we're moving away from the world where sort of companies just threw out a few numbers and said, aren't we great on climate, and then marked their own homework, to a world where they're making credible commitments that are consistent and comparable with each other, and they're being independently assessed and held accountable to those, and I think that's super important.
Amazing. I'm going to press the panel on the transition plan topic because there's been a lot of activity both in the UK and internationally by GFANZ and by the Transition Plans Task Force on this topic. So, Franklin, how best can the Transition Plans Task Force work with GFANZ to raise ambition internationally on guidance for transition?
So I think there are two challenges coming out of the work on transition plans. I think the Transition Plan Task Force, which is up and running and is now working very effectively, and I know colleagues here are involved on their advisory panels. I think the big question is going to be around the government's implementation, the government's sort of recognition and acknowledgement of the scope of the recommendations that come out of the task force towards the end of this year, and that they take as wide an interpretation as possible of the kind of the nature of the recommendations, and so don't try to narrow it down too much. In terms of collaboration between the Transition Plans Task Force and GFANZ, of course you know that GFANZ has been working on what they call sectoral pathways, which are essentially industry-level guidance on how to implement a net zero transition path. And GFANZ is actively involved on the Transition Plan Task Force, and members of the Transition Plan Task Force are involved in GFANZ, and so there very much is a collaborative approach between the two different initiatives. Of course, the Transition Plan Task Force will end up with mandatory requirements that are implemented and enforced by the government and the regulators, whereas GFANZ are advisory to members of the Alliance. But these two are very much running in parallel and very much sort of there's a symmetry to them and a harmony across them.
Incredible. And from my understanding, the requirements only apply to listed companies and financial institutions at the moment from 2023. So Karen, what do you think the next step is for government in ensuring that they support the rest of the economy to transition?
Well, I think there is an expectation that it will also apply to private companies as well and be implemented through the Companies Act in due course. So that should cover a much wider gamut. And I think the idea is also that it will sort of filter down through the whole economy, through the financial system, because of the way it invests in and allocates capital across the whole economy and indeed globally. So I think that is quite a sound theory of change. So that's all good. I think there are a few sort of factors that will determine how effective transition plans are actually driving this transition, because by themselves I don't think they are enough. It's great to have a plan in place, but then are they actually good enough? Are they ambitious enough? Are the targets they're setting ambitious enough? Because that hasn't really been specified so far by the government. Hopefully the Transition Plan Task Force, in its setting the standard, as Paddy was saying, will set a standard that is clear about what is good enough, because I think there's a debate about how prescriptive the standard should be, and I think it needs to say whether it's going to be good enough. I think the idea that the market can decide whether it's good enough is not necessarily the best way forward, because we know the market is not necessarily motivated primarily by tackling global problems, but instead by short-term profit. So actually I think we need regulators to take responsibility for monitoring the implementation of transition plans and the adequacy of the ambition in those transition plans, and holding them to account around it. And so we need a framework for doing that. I'm not sure that's yet been discussed or put in place. So there's a lot of work to be done around exactly what that looks like. I realise it has a lot of resourcing implications as well, because it's not easy to monitor thousands of transition plans. So how can that be best done? But I think there's a lot of ideas on the table about different bodies that could potentially take a role in monitoring or verifying as well the sort of validity of the transition plan. So I think that's a key part of it. And I think the other thing that we would say, maybe we'll come on to this a bit more in due course, but is that transition plan needs to include nature as well, because at the moment it's all about net zero, and nature hasn't been very explicitly mentioned in there, but actually we know that we won't achieve net zero unless we include nature mitigation options in that. It's going to do quite a lot of the work. We also know there's a risk of unintended negative impacts on nature if we don't take account of impacts in transition plans, because the sort of net zero drive potentially could damage some aspects of nature outcomes. Also, nature is a crucial goal in its own right, because we know that biodiversity loss and deforestation are continuing very fast, and that is posing its own threats to the economy and the well-being of humanity on this planet. So actually it's an equally urgent crisis, and so we almost need like a nature goal alongside net zero. That is quite difficult to define right now, to be honest. There is not a globally agreed nature positive goal yet. We would love to see one coming out of the Convention on Biological Diversity's meeting this year, later this year, where there's potential for them to agree a global goal, a nature positive goal, and then we need a sort of clear set of metrics like we've got for net zero carbon emissions by 2050 is a pretty clear goal to set the financial sector and the private sector to deliver. We need something like that for nature as well, and transition plans could then help, to define how that will be achieved in the same way. Makes sense to include it in the same process, because otherwise you don't want a separate set of rules around a different environmental goal, especially when there's so many interlinkages between the two. So that's what we are going to be working on in the Transition Plan Task Force, leading a work stream thinking about how to incorporate nature into those transition plans.
Fantastic. I think a really strong call for nature positive goals to be included in the Green Finance Strategy this year. I just wanted to pick up on the point about an international goal, because obviously the UK cannot act alone to tackle climate change. So I don't know if any of the panel wants to come in on maybe further mechanisms or ways that the UK could commit to raising ambition on nature internationally.
I can, yeah, so I mean, I think, well, first of all, it would be great if the Transition Plan Task Force is able to specify how to incorporate nature into transition plans, because then I think the plan is to work with the International Sustainability Standards Board to actually globalise this approach and share the sort of standards that are going to be set in the UK. So if it does end up with a really strong standard, that's great news, because it means it can be shared, hopefully, and influence the shape of standards being set at the global level as well. So that's one really good potential way forward. I think if the UK can champion a nature positive goal and possibly the alignment of the private sector to that goal at the CBD, Convention on Biological Diversity, that would also be really impactful, because that's what's happened on net zero in the UN Paris Accord. It was very clear that the financial and private sector would have to align with it. That isn't yet the case for nature, so we need that to be done as well. And so the UK could champion that. So I think there's a lot that the UK government can potentially do to really drive this forward at the global level.
Can I throw one in there as well? I agree with absolutely everything Karen's just said. The additional one that I suggest is get the regulators interested in nature and the role of nature in financial stability. So again, like looking back over like what has really accelerated progress on climate change being taken seriously as an issue in mainstream finance, the Bank of England's work on connecting climate risk with financial stability risk in 2015 that Mark Carney led has really helped to galvanise that sense that this isn't just some like wacky issue that no one serious in finance needs to care about. This is like right at the core of what is driving our economies and the stability of our economies in the long term. And so a number of central bank regulators, including I think the Bank of England, have done a bit of research in the last year on, okay, what about non-climate nature related risks? Like what's the impact of that on financial stability? And I think if the Bank of England and the FCA were to take some of that work and accelerate it, and the government was going to sort of gave them a push to do that, that would help to, again, bring the conversation on nature right to the heart of mainstream financial discussion in the way that we've seen on climate. I think that would be like a really powerful signal.
Fantastic. And Franklin?
I would just add to that, I think, I entirely agree with Paddy, and I think that there is a growing recognition amongst regulators, central banks and financial sector regulators, that what one might call ecological stability is going to be crucial to driving financial system stability in the future. And that moves climate and nature and biodiversity out of the environmental realm and into macro-prudential regulation, ultimately. If our global financial systems are dependent on ecological stability, then that becomes an issue for the most powerful regulators in the world. And I think that process is happening. We're seeing that, it's coming out of the Basel Committee and other, the FSB and other significant global regulatory kind of organizations. So I think there's a lot of momentum to build on there.
Fantastic. But I do think we've had a bit too much agreement on the panel so far, so I'm going to throw in a spicy one now. I'm going to use the D word, divestment. Obviously, the IEA came out, I think, last year and noted that their findings found that no new oil and gas investment was compatible with a 1.5 aligned climate objective. However, since then, we've seen the crisis that is happening in Ukraine, the global food crisis, cost of living crisis, energy crisis. So, there's a mix of headwinds and tailwinds here around oil and gas investment. So I'd just love to ask, potentially I'll come to you first, Paddy, your views about how best we start to wind down in a managed way investment in oil and gas and move that towards clean energy investment. And I think obviously we've been talking about the private sector, but the public sector has a role to play here too. So if you wanted to touch on that as well, that'd be great.
Absolutely. And I think this really speaks to the point that I was emphasizing at the beginning, that you need to see if we genuinely want a net zero economy and a net zero financial system, you need to see a pincer movement between, on the one hand, financial regulatory measures which affect the behavior of financial companies, and on the other hand, real economy measures which affect prices in the market. I think without both, you're not going to see the level of change that you need. And so to take the example of oil and gas, there are financial regulatory measures now, happily, which I think are starting to nudge financial institutions to actively start considering their portfolios and their investments in oil and gas. Because if, to go back to my previous point, if you say that you've got a net zero target for 2050 or earlier, and that covers all your activities, including your investment, you need to explain how that's consistent with what you hold in your portfolio, whether you justify that by saying, look, we continue to hold some energy companies, but we are engaging with them to change their behavior, because if we just sold them off, that wouldn't impact their emissions. Whether you decide to divest from them completely, we're getting that nudge now, essentially, to say, you've made these commitments, and to Karen's point, if someone else is checking you on the validity of those, I think that's really powerful. But at the same time, if it continues to be hugely profitable for oil and gas companies to operate, because essentially they're not having to pay the full cost of their actions, then there will be investors who continue to choose to invest in them, and you're not going to meet your net zero targets. And so government essentially impacts the cost of emitting carbon. And so things like they're consulting on the emissions trading scheme at the moment. They're considering other types of carbon pricing. I think you need to see both in order to see the movement that has to happen to meet a net zero economy. So it's not just about sort of instant divestment from oil and gas companies, or that you can entirely force all financial institutions to do that. I think it needs to be a balance, and it needs to include some real economy measures as well. But it's not a straightforward task. It's really difficult. But I think it's the first time in a while, and I've worked on climate for a long time, both for government and the private sector, that I think there's a chance that we might actually do it. I feel like the acceleration of change that I've seen in the industry and in government over the past year has been heartening. And so I'm still hopeful that we can keep 1.5 alive.
Amazing. And Franklin, I know this has been something you've been very close to. What specific measures for government do you think would support the transition that Paddy's talking about?
Yeah, I mean, obviously, I'm a fan of divestment, and if I ran a bank, that would be my strategy. I don't run a bank, and I understand the constraints within which financial institutions operate, obviously. I think there are 2 or possibly 3 key challenges. I think from a regulatory perspective, and banks don't like to hear this, insurance companies like this, but I think the capital requirements for fossil investments is the way to go. And in the same way that the Basel Committee has recognized the systemic risk for cryptocurrencies and raised capital requirements, proportionately, I think they should do the same thing for fossil investments. The second element, of course, is the corporate bonds markets, through which a huge amount of new fossil investment is actually financed now. And although banks are not necessarily directly investing in those bonds, they are often facilitating their issuance. And so there's a lot of movement now afoot to try to sort of bring that to the fore and make banks and the financial institutions accountable for their management and handling of corporate bond issuances in fossils. But the third is the much bigger kind of macro financial picture that inevitably in the kind of whole of economy transition that we are looking at over the next 20 to 30 years, the state is going to have to take liabilities for some of the longer term investments. But economic policy now can significantly reduce those exposures and liabilities the state will eventually have to take on. And so this is exactly why the Green Finance Strategy is perfectly timed to look at some of these questions.
Fantastic, thanks Franklin. And Karen, I don't know if you want to come on this as well.
Yeah, I mean, I think there's so much that the government can do through all sorts of different economic policy levers. And, some of the most obvious basic ones like tax and subsidy can be reformed. You can tax, and carbon price is obviously a key part of the whole thing. Hasn't been done enough. There's a few sort of efforts at that, but there's a lot more that can be done on that front. For nature, we need a resource tax in some ways. That we need to be able to just create the profit incentive directed towards the more green options. That's pretty simple sort of offsetting of a market failure, basically. So there's tons that can be done on that front. Using of blended finance to crowd in private investment into things that are more risky, especially on the nature side again. There's a lot of opportunities there to de-risk things, especially long-term things that are going to take a while to generate a return. Just banning some things or regulating some things. I think we're worried that the government's moving away from core standards in agriculture and instead going to pay farmers to deliver public payments for public goods is a great idea, but don't think that means we should reduce the regulation or the standards that are facing farmers. So I think there's so many quite basic things that we know that are very powerful tools that can be deployed by the government to actually encourage and incentivize this transition. And without that, it will be much more difficult for the financial sector to deliver on this task that they've been set.
And by blended finance, are you referring to the new UK Infrastructure Bank as a key lever?
Absolutely, that's one of them. But yeah, there's lots of opportunities. But yeah, I think there's a scope for blended finance globally as well to actually, because we talk about the net zero transition and a just transition. I think the risk of a net zero transition is that it forces companies to avoid investing in countries that are high fossil fuel emitting or usage countries, when actually a lot of those countries are where the transition's got to take place. So we actually need incentives, and blended finance can play a really important role here to invest in the transition in those countries as well. So there's a vast array of things that the government can do, and some of those things are being set out, but there's a lot more that can be done.
Mm-hmm.
And just to go back to Karen's point earlier, the idea that you could package up some of these measures into a sort of regular, consistent net zero transition plan for the entire economy is something that both WWF and Aviva have been strongly pushing, which is, I guess, because of our involvement in the Transition Plan Task Force, looking at how should a private company set out its plan for the net zero transition, it sort of prompts us to think like, can the government think about the economy in this way as well? And then that would help to give us in the private sector a bit more clarity on the long-term direction, and it would also have the accountability for government in meeting their net zero transition plan that we're asking for the private sector as well. So I think that could really help to package up some of all the different policy measures that Karen's outlined there, and you would have to say, how does that all add up to net zero? And in some ways you'd be sort of giving a bit more power to organisations like the Committee on Climate Change. So we saw the Committee on Climate Change's report this week, basically saying there'd been some good action from the government, but we weren't really on track to meeting the UK's net zero targets. But that's all very kind of advisory. I would like to see something that was a bit more like the government puts out its own net zero transition plan and then all of the accountability mechanisms kick in. So the Office for Budget Responsibility should be looking at every time the Treasury does a fiscal statement. You could have, you know, each individual government department also setting out a net zero transition plan, looking at their own policies. And all of that should have to report back to Parliament, because I think just holding the government being willing to hold its feet to the fire in achieving the net zero transition in the same way as the private sector is sort of trying to now, I think would be really powerful.
Amazing. I mean, I think I'd just love to pick up on that one word you said quite a few times there, accountability. And I'd like to come to Franklin. Franklin, do you have any thoughts about how we can build in the governance process around the Green Finance Strategy going forward, and how that can help support public finance and public policy as well?
Yes, I have a lot of ideas around this space.
We did have a chat before about it.
I think let's focus on private finance specifically and GFANs in particular. And I do think that there's a growing recognition within the Alliance and within the leadership of the Alliance about the need for significantly enhanced transparency around the commitments that have been made at Glasgow and elsewhere. And I think that inevitably, you know, particularly if GFANS is going to retain the credibility that it had at its launch, not only transparency but reporting is going to have to be made much more publicly accessible and accountable, and that ultimately some kind of formal membership governance framework is going to have to be brought in for that, so that institutions, whether asset managers, asset owners, banks, insurance companies, who are clearly not making the progress along the GFANS ramp that was envisaged in the call to action, there's some mechanism for addressing that formally. There's some kind of adjudication process that goes beyond the race to zero criteria, which says being a member of this alliance is valuable, but it also comes with a commitment cost, and that is that you actually have to deliver the finance that you've said you're going to deliver.
Thank you, Franklin. And I think there's so much we could talk about here, but I think it's now time probably to move to the Q&A section, because I feel like we've got a number of experts in the room and online. So I'd love to hear your perspectives. Eduardo will be passing around the mic. So if you do ask a question, please say your name and where you're from and ask your question. Anyone want to come in?
Thank you, everyone. Hi, Greg Lowe from Deloitte. I want to pick up on 2 points. I mean, one was, I think that point around the credibility of transition plans for the financial sector. But is there a bit of a chicken and egg situation here where, you know, the financial sector also needs the non-financial sector to have credible transition plans to actually make sure their own transition plans are successful, and kind of your thoughts there. I guess my second question is around joined-up thinking on policy, sort of going beyond just financial regulation. You know, I've been working around this topic for quite a number of years, and I think you know, just winding down you know, the kind of carbon-intensive industries also requires that, you know, I think particularly in the cost of living crisis, that equal scaling up at rapid pace of low carbon infrastructure and all the associated regulatory approvals that might happen in the planning system around technology approvals, et cetera. Do you think enough is actually being done to kind of link the discussion around transition plans and finance to all of the other policy challenges that might be kind of picked up in the non-financial regulatory space? Thanks.
Who would like to come in?
Paddy, you wanted to talk about the whole economy?
Hi, I could talk transition plans till the cows come home. On your first question, really good question. I completely agree. It can't just be financial institutions setting transition plans. So in the two contexts that Aviva is leading work, so we're leading work on transition plans in GFANS, and we're co-leading the UK Transition Plan Task Force. In both of those instances, it's clear that we want to do guidance for both financial institutions and for real economy firms as well. Because you're right, it's not as useful for a financial institution to do a transition plan if all the companies in which it's investing or lending money to don't themselves have transition plans. So we want to do both. In GFANZ, which has a kind of year's head start on the UK work, we've actually got 2 sets of guidance, which is complementary and matches, but we've got one which we've led with HSBC on financial institution transition plans, and then there's another one on real economy, which has been led by the London Stock Exchange Group. But we've kind of worked to make sure that's consistent. And then similarly, that work is then, we're sort of using some of it in the UK Transition Plan Task Force context. What was the second question? Sorry. Just
it was basically around the need to rapidly scale up low carbon technologies and infrastructure, and the fact that there are going to be regulatory and policy challenges to getting that up to scale. And I think a good example of that in the UK might be sort of the debate we've had around onshore wind, even planning permission for kind of energy efficiency upgrades to homes. So is there enough policy dialogue between the financial regulators? Obviously there is discussion with H&T and Days, but is this a whole kind of regulatory discussion that's really kind of penetrating the levels of policy that need to happen to ensure that we can move this out at scale?
I mean, I suspect not, but I don't really know, to be honest. I know that I do keep hearing about things that are going on in government that aren't necessarily being trumpeted loudly, so perhaps, but I do, yeah, I mean, I think that's absolutely right. There are a lot of challenges to anything happening quickly, for sure, and these planning issues. I think there has been a push to address or review planning issues. I think that has its risks attached as well, actually, because that could go in the wrong direction. I'm not sure where that's actually got to, but yeah, absolutely. And I think one of the ideas we've talked about before is whether, as part of a transition plan, companies can sort of set out the things they need to happen to enable them to scale up or speed up progress as well, and help to sort of add their voice towards, advocating for, the policies that will really work best, and that will help to, create pressure for faster progress on a lot of these things to offset possible vested interests opposed to that change. So I do think that's a potentially valuable part of what this transition plan process could deliver if that does happen. So yeah.
No, I do, I agree with that, and I think it'd be a good one to test the government on. So again, having come from a government background and still, having friends working in the government on different aspects of this, my sense is that this green finance strategy, every iteration of like a net zero or green finance strategy over the last few years has got better in terms of inclusion of different parts of government. So, when I was in government, you might just like throw it all at DEC when DEC still existed, and they would mainly do it, and the Treasury might turn up at some point, it's far too expensive, and chop up a load of stuff. My sense is now that might still be happening a bit, but it's a more cohesive, coordinated process between BEIS looking at the kind of the overall net zero elements and the real economy package, Treasury looking at the sort of financial sector and an overall economy element, and then an increasing role for DEFRA looking at the nature elements as well. So I'm hopeful that there is more coordination now, but I guess the proof will be in the pudding. And it's another reason why we're saying have a plan for the whole economy, because then hopefully you're picking up all these different interactions and making sure that there's some sort of cohesiveness to it all. But it's a really good question.
Yeah, and I think, Franklin, if you want to come in.
Yeah, indeed. I mean, just perhaps a word. I mean, E3G is a climate politics think tank. So just a word about the politics of that in the UK in particular, and the extent to which the perception at the national level that local opposition to, for example, onshore wind is a kind of determining factor about government policy making in that space. And there's a lot of very interesting new microeconomics literature coming out about what drives kind of local opposition to land use change or to the implementation of onshore wind in particular. And some very compelling evidence that actually a different engagement strategy with local communities can actually significantly shift opinion about the installation of new onshore power, whether it's solar or wind arrays. And so I think that requires a shift in the way that the government perceives the political risks associated with some of this onshore power in particular. But I think it is achievable, and that would actually help to marry up the kind of planning policy and strategy with the financial regulatory policy and strategy.
And I think I completely agree, Franklin. And I think one other thing I will add to that question is the strategy is not only about financial sector and private sector regulation, it also has to, as the panellists have very clearly laid out in this discussion, set out where public policy and public investment can be strategically changed or applied to unlock new markets and tackle barriers and so on and so forth, and even training and skills gaps. So I think it's really important that the Green Finance Strategy doesn't just focus on point source measures to like transition plans and so on and so forth to help the private sector transition, and rather thinks, as Paddy and Franklin have laid out, and Karen as well, that on a holistic plan for how all the levers across government come together to support the transition. I think we could talk about this one for ages because it was a great question, but I'm going to go to a couple of the ones I've got in front of me from the Zoom. So thanks everyone for listening. I hope you feel like we're in the room. The first question, I'm not sure who it's from, but it's to achieve the net zero transition, significant private sector funding is required. How could and should government track the levels of private sector investment required to meet net zero, given the challenges in accessing comprehensive data? And I'm going to tweak that slightly because I think it's not just about private investment, it's also public and private. So Franklin, I might come to you on this one first.
It's not easy. There are, of course, a large number of different data standards and methodologies out there. The data exists, but it's a matter first of harmonizing the methodology which underpins the data collection and dissemination. Paddy's already touched on the role that the OBR could play in that. I think there are clear commitments from the government under the net zero strategy to monitor and report on the implementation of the investment targets set by the Climate Change Committee. And so there are the tools to do that. A lot of the initiative and goodwill is going to have to come from the private sector in particular, for whom this is going to be a cost. But I think at the end of the day, in terms of the integrity of the commitments that the financial sector has made, it's a cost worth paying.
Just to add a point to that as well, so something that I'm not an expert in, but I was quite excited to hear on another panel that I was on yesterday. So GFANS is actually a separate bit of GFANS to the work that I'm doing. They're setting up a big open data platform where they're going to attempt to bring together all kinds of different sources of data which should inform the commitments that GFANS members have been making. So I don't think it completely answers the challenge here in the UK, and I imagine it will be harder than it sounds, but it at least sounds like a positive development.
Fantastic. I think given time, I know we started a little bit late, so we might run over a little bit, but I've got two questions from the audience. Maybe I can just take them together, and the panellists can maybe choose which ones they like to answer. So this lady here.
Great, thank you so much, everyone. I'm Kathy, and here in 3 capacities. One is as a steering committee member of the London Climate Action Week. So thanks so much to Aviva for the support, and also to our amazing E3G colleagues for organizing it. And also I mainly follow UNFCCC processes, and in another capacity here with my Deloitte colleagues. And yeah, so my question is really about, if any of you see the link, or how do you see the collaboration between private financial institutions and also how government feed into this collaboration, and also together the link with multilateral finance, especially MDBs, given so many recent discussions at CHOGM and at G7. So curious in hearing your views, any linkages between these three, and how do you see them to further collaborate? Thanks.
Fantastic. And if we could just take, I know your name, Ian's question. So.
Thank you, and likewise, thank you so much for a really interesting panel. I wanted to come back to the discussion. Sorry, my name is Ian Buller from UK Finance. I wanted to come back to the discussion about incorporating nature considerations into the risk management framework and the disclosure framework. I think within the financial services sector, there's a real recognition that this is so much more complicated and multivariate than the climate, than disclosure and risk management within the climate space. And perhaps in the context of COP15, I wondered if you could say a little bit more about what good looks like in terms of the objective that we land on, and also the kinds of measures that might be used to map how we're meeting that objective. Thank you.
Fantastic. Thank you both. And actually, you wanted to, if you could keep it short, if that's okay, just so the panelists can have time just to answer.
Sure. Instead of two-part, I'll stick with one part, and it actually is somewhat related to the question that was just asked. So I'm Sue Reed with Global Optimism. Really appreciate that nature was centered in this rich discussion today. Nature seems to have had a real watershed moment with nature intersection with finance at COP26 with incredible momentum across the landscape. Be great to hear from the panel just on one element, the risk side, on what can and should financial institutions and other private sector actors be doing right now in terms of addressing risks associated with deforestation as they progress and work toward their net zero targets with all of the co-benefits that will entail. Thank you.
Fantastic, thank you. And your question actually very much mirrors Mark Ellis-Jones' question on the chat as well, so I feel like we're including the people online. So how should we divide this up? Perhaps if I
can pick up the first question.
First question,
private
Franklin?
finance. So I used to work in a development bank, so this is very dear to my heart. I think a lot of the emphasis and a lot of the narrative and rhetoric around private finance initiatives, including GFANs, has been about the need for the shifting the trillions idea of seeding public finance to de-risk private investment. And I think that particularly given the pretty dire macroeconomic and fiscal outlook for the next 3 to 5 years, that is going to be absolutely essential. But of course, in development economics, leveraged finance has been around for 75 years and it's never been particularly successful. So I think that particularly given the urgency of the situation and the position that we're in, really out-of-box thinking about new instruments for de-risking is going to have to come into play in that relationship between MDBs and private finance. And at the same time, the MDBs themselves are going to have to take a lot more risk on their balance sheets, and that's something that development banks are profoundly opposed to. So that's going to have to be a shareholder-driven initiative at the World Bank and other development banks, and it's going to have to be backed up through some form of the IMF's SDRs reissuance programs coming out.
Thanks.
On
Karen.
nature, I'm not so much an expert.
Well, perhaps Karen, if you want to take the question on nature.
Okay, so in terms of what good looks like at COP15, well, we've, at WWF, we've been part of the Nature Positive Coalition, which has been calling for a Nature Positive global goal, and specifically defines it as a target to get nature and biodiversity back to 2020 levels by 2030. So there's a sort of curve that shows, there's got to be an inflection point, and we've got to start restoring nature and getting back to where we were at 2020. We're not currently on track, let's just say that. So, but then I think what you also need is very clear metrics of how to measure that, obviously, and that's also challenging. And what I think we need for the purposes of things like converting that into transition plans and focusing the minds of the private sector on how to deliver against that is we need, a small number, maybe 2 or 3 to be realistic, metrics that capture the key dimensions of nature positive for the private sector to focus on, and that things that they can actually impact and measure in relation to their own business as well. So I think we need a process of sort of bridging between the science, the global science metrics on nature, down to something that is more manageable and measurable by the private sector. So there's a lot of work to be done in that space. I think TNFD is doing that work, but we wait to see, because it's obviously very much in train. So yeah, we need that conversion of a global goal. So I think that is what we would love to see coming out of COP15. I know TNFD are working with CBD, so hopefully that's what the outcome will be. Just on the deforestation point as well, I think we've done a lot of work on that, and if you review the approaches different companies take, there's definitely examples of good practice and bad practice in terms of some companies are doing a lot more to measure, try and get a grip on, and engage with companies in their supply chain or companies that they are financing to measure that deforestation risk and to try and address it. Others less so, and I know there's a lot of challenges, traceability and transparency down the supply chain, but nonetheless there's a lot that companies can do, and we'd really like to see deforestation being part of the transition plan process, because both for climate and nature reasons it's a crucial metric. So there are publications out there that go into that in more detail as well, I think so.
And just to add on that point, it'd be great to see more companies and more countries signing up to the various deforestation pledges that were made at COP. So, you know, Sue did amazing work coordinating those pledges, including one for investors, which, you know, we were very supportive of, but we'd love to see, you know, other investors take that up too. And also there was a parallel process of getting states to commit on deforestation too. So we don't want to sort of just let that lie and forget about it. We want to move forward with it. And this year, with what's going on in the biodiversity COP at the same time, I think it's a really good opportunity to give it a big push.
Fantastic. Well, I mean, that was so many great answers there and so many great questions, so thank you so much. Just one last from me before I let you all free to have some drinks and nibbles, and the rest of you to hopefully have some drinks and nibbles as well at home. We've been talking a lot during this session about the need for there to be a holistic, multi-pronged approach, a silver buckshot, if you will, approach to delivering this kind of green finance strategy. But I'm going to revert that in my final question. I'm going to ask the panelists in one sentence or less, 30 seconds or less, what is the most important thing you want to see in the 2022 Green Finance Strategy? I know, horrible question, but chair's privilege. Paddy.
I want to see a commitment to consistent, credible public and private sector net zero transition plan.
Thanks. And nice and short. Thank you very much. Karen.
I want to see a net zero and nature positive made a top priority statutory objective in the future Financial Services and Markets Bill.
Fantastic. And Franklin. Enthusiasm from the audience here.
I would like to see the UK government making a strong and credible commitment to being a global leader when it comes to supporting the international financial regulation regimes and promoting global standards across these various regulatory elements that we've been talking about today.
Fantastic. Well done on short answers to a hard question. Well, it leaves me to just kind of close up the session and say thank you so much to our amazing panelists, Paddy, Karen and Franklin. I have to say I've learned so much from today's discussion. I hope you have too, and I hope you have at home as well, or in the office. And I just want to thank Aviva again for this amazing space. I think it's been a fantastic event. And without further ado, I'm going to close today's session. So thank you very much. We'll see you outside for drinks, and we can talk about Glasgow, I guess.